The M&A wave that began more than a year ago will continue in 2022, but the success of a transaction depends on how well corporate and private investors understand the new equation for value creation in deals. To overcome the high prices and achieve positive returns, companies need to realize that value isn't defined by the price you pay in a deal, but rather what you can unlock and cultivate from a business to help drive overall growth. Here are the paths companies can take to improve their odds for deal success. Portfolio optimization is critical for identifying key capabilities. That can ultimately lead to capabilities fit deals, which our research has shown generate more positive returns. Optimizing portfolios also can reveal potential divestitures. In a seller's market, a strategic sale can generate capital for new and existing growth areas. In many deals, determining value requires more than the usual diligence. Deal makers need to pay more attention to the elements of value that can be harder to understand, such as a company's purpose, its culture, and its employees' digital acumen. With scrutiny of certain sectors increasing, companies need to stay vigilant on how regulatory shifts could affect investment strategies and deal decisions. Persistent supply chain issues are forcing companies to reassess their agility and resilience, which could impact valuations in deals. And resilience is important in other areas, from workforce stability to reliable cybersecurity and privacy protections. A few of our sector leaders have been discussing their thoughts on the year ahead for their industries.
We also continue to see a lot of SPACs do investments in industrial products, really bringing that investment to take companies that aren't necessarily venture, but they need that investment to get to the next level.
Private equity investors with a slew of dry powder, coupled with strong corporate balance sheets from those that have emerged positively from the early phases of the pandemic, are driving substantial deal volume in all subsectors of health services.
A lot of PE funds are rethinking their data strategy. That plus ESG is putting a new emphasis on how private equity thinks about value creation.
Digital and technological capabilities. These are areas of focus as business models continue to shift and consumers continue to change the way that they consume or the preference that they have.